Hello and welcome. In this lecture video, I'm going to go through and talk about the components of the master budget. Using this example, I'll talk about the components of the master budget on a fairly high level, and then I'm going to go into detail on how to create the sales budget and also the schedule of cash collections, or also known as the schedule of cash receipts. Okay? So working with our example right over here, we have our master budget example. And this is our company called Royal Company. And we're preparing budgets for the second quarter, which ends June 30th. Okay, so April, May, and June is the second quarter. And so it ends June 30th. And what we have is we have our budgeted sales in terms of units. And we only make one product. And we're assuming that Royal Company only makes one product just to simplify the budgeting process for learning purposes. So we have April, we think we're going to sell 20,000 units. May, we think we're going to sell 50,000. June, 30,000. July and August, which are not in second quarter, those are in third quarter, but there are reasons that we need to know those, which we'll talk about when we get to the production budget. Okay? We sell each unit for $10. And so what we're going to do is we're going to use these assumptions to prepare all of these budgets. Now in this lecture video, as I was saying, we'll cover the sales budget and then the schedule of cash collections. And then in subsequent lecture videos, we'll go through and cover all of these, okay? So let's go ahead and talk about the sales budget. And as I was saying in the first lecture video for this chapter, the sales budget is always the first budget prepared, okay? Now, you can see with our Royal Company that I've given you, or we've been given, how many units we think we're going to sell. So, for example, in April, we think we're going to sell 20,000 units. In May, we think we're going to sell 50,000 units. How do we get to that? Well, probably the most common way is to ask salespeople. To say, okay, how much do you think you're going to sell? And then they can give you some ideas of how much that they think they're going to sell. Just like here at Mary Washington, we could be talking to admissions saying, how many students do you think that we can enroll? Because for Mary Washington, a big component of Mary Washington's revenue comes from tuition and room and board. Okay, so we need to know how many students do we think we can enroll. How do we do that? Well, we talk to the admissions officers. That would be one way. We could also look at some economic models, some sales trends, probably, and perhaps even looking at some trade journals as well. So when we look at the sales budgets, if we look on that prior page that I just showed you in your course pack, you can see that April, we think we're going to sell 20,000 units. So this is my units right over here. I'm going to go ahead and start completing the sales budget. In May, 50,000 units. In June, we think we're going to sell 30,000 units. And then what we get up to is we can then calculate the total for the year at 100,000 units. Okay? And then we're told on the prior page that we sell each unit for $10. $10. So I'm just writing 10 and then just saying each one is $10 right there. So I'm multiplying the number of units by the sales price to get the total amount of sales dollars. And then, of course, down here we have 1 million. Or as Dr. Evil would always say, 1 million. Okay? You may not know who Dr. Evil is. If you haven't, go watch the Austin Powers movies. All right. So anyways, we have our sales budgets. And now what we can do is we can look to see how much cash do we think we're going to collect from our sales. Now, you might be assuming right over here that we're collecting all this in cash, but that's not always the case. Because what we can do is we look over here, we can make sales on account. Okay? So basically what that means is that we can extend credit to customers. You can extend credit to our customers so we can make our sales on account. And so you need to think about what is the journal entry to record a sale on account. I want you to pause the lecture video and I want you to write down right over here, because I'm going to write it down in a second, what is the journal entry to record a sale on account? Okay, so in terms of a sale on account, if you said debit to accounts receivable, credit to sales, then you're correct. And then also, although this isn't really particularly relevant to the schedule of cash collections, the other part of that journal entry would be to debit cost of goods sold and then credit either merchandise inventory if we're a merchandising company, or finished goods if we are a manufacturing company, okay? So when we make a sale, we're debit accounts receivable and we credit sales. I want you to pause the lecture video and take a second and tell me what the journal entry would be. Write it down right over here or somewhere. Okay, I'll probably write it down up here because I'm running out of room. I want you to write down what the journal entry is to collect on an accounts receivable. Write down the journal entry to collect an accounts receivable. Or the other way you can think about that is, what is the journal entry when our customers pay us? So we made the sale to our customer. What is the journal entry to then record when our customers pay us? Pause the lecture video and write it down, and then let's check your work. Now, if you said debit to cash, credit to accounts receivable, you're correct. All right. So I think doing these journal entries helps to put this in context about what's happening right over here. Because when this company, Royal Company, they make a sale, this is what they do. They're not getting cash right away. When do they get cash? The company collects 70% of its sales in the month of sale. So what this is telling you, this first part is saying, if we make $1 million of sales in April, we'll collect 70% of that $1 million in April. So you would be debiting cash, crediting accounts receivable for 1 million times 0.7, $700,000. Okay, that's how much cash we would get. We would then collect 25% of this in the next month, which would be May. 5% of our sales we're not going to get. So this is, remember what this is called from Accounting 101, this is called bad debts expense, okay, or our allowance for doubtful accounts. So debit the bad debts expense and then credit the allowance for doubtful accounts to do our estimate of bad debts expense. That's what this is. So we're never going to get this. So we can't count this in our expected cash collections because we're assuming some people just aren't going to pay us, okay? This last bullet, it says the accounts receivable balance on March 31st. March 31st is the end of quarter one. This is the end of quarter one, which is then the beginning of April. Because think about this. Think of it this way. This is the accounts receivable balance on March 31st at 11:59 p.m., $30,000. You turn the clock 1 minute forward, that becomes beginning accounts receivable for April, which is also beginning accounts receivable for the quarter, because April is the beginning of the quarter. Okay? So it's important to go through these and think critically about these 3 bullets before we start doing our table, which is our schedule of cash collections. And what this table is going to show us is how much cash do we collect in each month, and then for also the entire quarter. Okay? So if we look over here, we can start to complete it. It says accounts receivable on March 31st was $30,000. We know that is our beginning accounts receivable for quarter 2, as I was explaining earlier. And then what we say is we have April sales. Where do we get that from? Our sales budget. So that's what I was saying. The sales budget is always the first budget done. And now we're not looking at our units. We're looking at our sales dollars right over here. What's our total sales dollars for our quarter 2? It's $200,000. Now, the company collects 70% of that $200,000 in April. So what I can do is go 200,000 times 0.7 gives me $140,000. So I will collect $140,000 of that $200,000 in sales in April. Then it says 25% in the month after the sale. Okay, so that means I collect 25% of the $200,000, which is my $50,000 April sales collected in May. Okay, so now what I can do for April is I can go ahead and add this, and this gives me a total of $170,000 that I'm collecting in April, which is my beginning accounts receivable. I'm assuming that's all collectible because it says so, plus my April sales that I collect in April gives me $170,000. Okay, now I have a question for you. I want you to think about is what would be accounts receivable balance at the end of April? If we did a balance sheet at the end of April and accounts receivable shows up on the balance sheet at the end of April, what would be the balance in accounts receivable at the end of April? Okay, so let's think about this together. Well, it's $50,000, and I'm talking about after the allowance for doubtful accounts, okay? Why is it $50,000? Well, I have $200,000 in sales, right? So what I did for April is I debited accounts receivable for $200,000, credited sales for $200,000, and then I came up here and I collected $140,000, so I debited cash for $140,000, credited accounts receivable for $140,000. How much of my sales for April have I not collected in April? Well, 5% I'm never going to get, so I can't count that. It's 25%. So my accounts receivable, and I'm going to abbreviate accounts receivable, AR, my accounts receivable at the end of April is equal to 25% of April sales, because that's what I will collect in the next month, which is equal to $50,000. Okay? So what I want you to do is I want you to pause the lecture video, and I want you to complete May and June. I want you to tell me how much cash we've collected for May, how much total we've collected for June, how much total we will collect for the quarter. And then I also want you to tell me what is accounts receivable at the end of June and what is accounts receivable at the end of the quarter. Okay? So pause the lecture video, complete this, and then come back and let's check your work. Okay, so let's see how you did. So what we have over here is for May, we've collected $400,000 in cash. And again, we had that $50,000 from April sales. And then if you remember from May, we had $500,000 in sales times 0.7 gives us $350,000. We add those together, we have $400,000. And then we collect 25% of that $500,000 in sales for May. We collect that in June. That's right over here. And then remember for June, we had $300,000 in sales times 0.7 gives us the $210,000. Add the two together, $335,000. Then we can add across. We collect a total cash of $905,000 in quarter two. I then asked you, what is accounts receivable at the end of June? Remember, June sales are $300,000, and we collect 25% in the next month. 70% of June we collect in June, 25% we collect in the next month, 5% you're not going to get. That's bad debts expense, so you can't count that. Okay? So we have our 25%, $75,000 is the accounts receivable balance at the end of June. That is also the quarter two accounts receivable balance. Why is that the same? Well, what is the end of quarter two? The end of quarter two is the end of June. So this is really asking the same question. Okay? If I said, what's accounts receivable at the end of June? That is the same thing as me asking, what is accounts receivable at the end of quarter two? Because the end of quarter two is the end of June. Okay? So hopefully you got those both right. And this concludes this lecture video. In the next lecture video, I'll be continuing to discuss additional budgets that comprise the master budget, such as the production budget and the direct materials budget. Okay? Thank you so much.